Hello and welcome to another episode of Fintech Focus TV with me, Toby. I am absolutely delighted to bring to you today one of our very first guests from the lockdown and the president of Baton Systems alongside him as well. We are delighted to introduce you to Arjun and Jerome from Baton Systems. How are you guys?
Very good.
Very well. Listen, it's great to have you both on the screen today. It's been such an exciting journey for you guys since we last spoke, Arjun, as well. There's been so many developments, and I know we've got loads and loads of different things and exciting things to unpack today. Before we go into that, let's refresh our viewers a little bit on Baton's journey. Arjun, I'm going to come to you first. Tell us a little bit about Baton and your background as well.
My background, I come from a product and technology background, built real-time distributed systems, built databases. I've been doing startups for the last 15 years. The last company that I co-founded, Compass Labs, was acquired by Yahoo in 2013. I've been in payments for the last 8 years, mostly focused on wholesale payments. You know, Jerome, I met Jerome back in 2014 when I was still in a retail payments hat that I had on. He was somebody that I learned a lot from, who helped me shape my thinking. And he also turned out to be my first customer when I started the Baton journey. And I'm so happy and delighted and humbled, really, that somebody that I respect and I learned a lot from has decided to join us in this part of our journey. What we do as a company is we synchronize and orchestrate asset movements. Why is that important? Because we believe that there's a lot of inefficiencies in the market. Something to the tune of $70 to $80 billion is what is spent by financial institutions to make asset movements better, faster, and with less risk. That is a piece that we are trying to make more efficient. But more importantly, we are trying to disrupt and democratize access to financial market infrastructure. And that's the journey that we've been on for the last 5 years now.
It's an amazing journey as well. And I guess, look, there's no greater praise for you as a business when your first customer decides it's so good that he wants to have a piece of it as well. Jerome, tell us about your story.
Well, my story is one of about 35 years in markets, starting way back when prices were written with a piece of chalk on a blackboard on a Paris exchange in the bond pit. But most of that time spent in derivatives with JP Morgan and ultimately with Citigroup, from where I retired in September of 2020. Arjun was too kind in his comments. I think if you put things into the balance, I would argue I've learned a bit more from him than he has from me since we've known each other. But it is true that we've known each other for a long time. Interestingly, I really did think that after about 35 years in markets, I was ready to hang up my boots and enjoy, a so-called retirement. After about a week of retirement, I was going a bit stir crazy, perhaps unsurprisingly for those who know me. And really, quite fortuitously, I received a call from Arjun, who asked me to become an advisor to Baton at the time. And I thought that was a great opportunity for me to remain engaged in an area that was very meaningful for me. Throughout my career, I think one of the hugest challenges that we contend with as derivatives clearers is, the check is in the mail. We depend on 24-hour payment cycles, very large sums, because we're dealing with derivative margin from some very, very large players in the market. And particularly at times of high volatility, those numbers, can be multiple billions, in flight. And so I've always thought that there's a better way to do things. And I started to get very excited about my involvement with Baton, even though focused on, FX settlements today. I think there is extensibility of what Baton focuses on in terms of riskless settlements, so way beyond the FX space, and hopefully that's something we'll be reaching for someday. So, as things developed with Baton over the course of 2021 last year, Arjun and I worked to recruit two senior advisors, Chris Giancarlo, former head of the CFTC, and Bill Cohen, former Secretary General of the Basel Committee. And by then I was, regularly joining client calls, having some pretty deep and meaningful discussions with Arjun in terms of strategic direction. Arjun said to me, Jerome, why don't you just, join the executive as president of the company? And it didn't take me too long to to agree that that would be a great idea. So
He's back.
Yeah, I'm back. I'm very excited, and for me, it's actually quite refreshing working in investment banking for as long as I have. It's very nice to be working in a much smaller, much more nimble, let's say, environment, working with great people, all like-minded, all focused on the same goal. Very, very little ego involved, as we're all just working as peers to achieve a common objective of really call it mixing things up in terms of post-trade in the FX space for starters.
I think it's amazing. And Arjun, you mentioned before about the sort of scale over the last 5-6 years. It's 2016, I think you open doors, and it doesn't seem that there's very often a day where you don't pass, open up LinkedIn without some sort of press announcement or news involving Baton out there in the markets at the moment. So that sort of rapid scale that you guys have enjoyed, and significant global growth, bringing real talent into the business it's been quite a journey. Tell us a little bit about some of the highlights from that.
Thank you. I mean, from the outside, it looks like we've achieved it in a short time. For it feels like a lifetime on this side of the table here. But jokes apart, when we started the company, we knew we were cracking a very hard problem. It's not an easy problem to solve because the problem is big, and it's a complex problem. And when you look at the companies in the blockchain space who've come out and professed to solve all the problems, I would argue, even when I started the company, I had the hypothesis, but now it is more or less confirmed that those people did not understand the depths of the problem. They had not gone in deep enough to understand the problem. So this is where I spent a lot of time to learn the problem before I attempted to solve the problem. Now, when you think about laying new rails, I'll bring the analogy to laying new rails, whether it's laying rails for transportation or cellular towers or any of that stuff, you need to start with the hubs. And that's not easy. You're building new cellular towers. You need to start with the largest cities. What is the equivalent of the largest cities in banking? You have to go to the largest banks. That's where the biggest problems are. That's where the most money is exchanged. And then you need to start laying rails, or you need to start having hubs in those locations. And that's what we focused on. So I would say that the first phase of our journey was basically cracking the largest banks. This is the hardest of the problems. And building those rails. The second thing is we also built rails into the settlement venues. This could be where transactions happen. This could be exchanges, it could be custody banks, it could be Nostro accounts. We built connectivity into that. So essentially, the first phase of our journey, the way I look at it, is there's a lot of shovels and pixel and just building those rails. It was hard work. It was a lot of hard work. Now we are starting to see the results of that one. Right now, to onboard a next bank or to onboard a new node is significantly faster. To give you an example, the last one that you probably saw recently about an interbank settlements, from the time we signed the contract to going live, took us 4 months, which in banking terms is unprecedented.
It's like next 24-hour delivery, isn't it?
So that is what we did. So now we are excited about phase 2. Which is now we've done the hard work, and now it is about the next level, which is scaling up of the company. I look at it as 3 stages of it. So we are now moving from a phase 1 to a phase 2 of our journey. And this is where I'm really excited that we've gotten not just the technology people that we started off, and then now we have industry practitioners who've done the hard work, who know what it is to be living in the life of a treasurer, of a risk management team. Jerome has done this for decades. We have other members in the senior management team who've done this, and that's what is really exciting, and we think it's going to be transformational. I'll hand this over to Jerome to give his thoughts on the topic as well.
Well, thank you, Arjun. I'll speak through the eyes of a practitioner. I think there's still a fair amount of hard work ahead, quite frankly. Toby, I don't think we're completely out of the woods yet, but I think that things or forces are aligning that will perhaps facilitate our journey moving forward. I think that there are 4 essential parameters when you think about FX in particular that preoccupy risk managers or treasurers, credit officers around risk, around liquidity, around funding, and around actually the number of actual currency pairs that can be settled, on a riskless basis. That has changed significantly. And I would argue, particularly over the past year or so, since the onset of the COVID crisis, where markets really went into a free fall in March of 2020 with unprecedented volumes coming through the pipes. I think that gave everyone pause to, think about, are we really okay relying on 20th century, infrastructure and technology to essentially tackle the problems of the 21st century? Things have changed significantly. We are looking to provide an alternative to CLS, which is really the only, place where people can go to settle on a riskless basis today. When CLS was first introduced, roughly $4 trillion of average daily volume, was exchanged. Today, we're looking at close to $19 trillion in an environment where the largest growth currencies are not even covered, by CLS today. And we do have the technology and the workflow to essentially tackle that challenge. But working with clients, getting them to change their mindsets, getting them to adopt a new set of lenses and optics to essentially tackle that problem represents a lot of work. There are lots of questions to be asked from a regulatory perspective, from a legal perspective, from a technology perspective, and that takes time. Arjun was referring to 4-month onboarding of a counterparty recently. Prior to that onboarding process, there was a very large chunk of time devoted to legal analysis, compliance analysis, regulatory analysis, et cetera, to get us to the point where we could actually, engage in that onboarding. So I do think that the winds are blowing. I would also add to that regulators also, appear to be supportive of what we're doing as well. Both Arjun and I sit on the CPMI PVP committee, or the committee that is looking at new solutions for taking PVP forward. And there's a very clear sense that they view technology firms such as Baton as key elements to driving that agenda forward. We also are very engaged with regulators such as the New York Fed, the Bank of England, and the Monetary Authority of Singapore, again in terms of driving forward this particular discussion, because we do believe that a big part of this issue needs to accommodate new regulatory constructs and new regulatory structures as a means of accommodating a much more significant uplift that tech firms such as Baton bring to critical market infrastructures.
It's really interesting, everything that's just been said on that, but particularly with the view of this not being an easy gig. It's not an easy sell. Tell us about some of the challenges of being an emerging fintech and the lessons that you've had over that sort of journey, Arjun.
In hindsight, I think that I underestimated the challenge it would be to accept this new paradigm of moving from centralized venue. I mean, it's a mind shift, right?
Yeah.
Banks are used to a mindset of being centralized. That is, everything is running in a centralized venue. You think about the venues that are there. It's the DTCC, it's the exchanges, it's the CLS. These are centralized venues in different jurisdictions, right? You have US, Europe, and each jurisdictions. And the ones in Europe, if you have to access Europe, you need to have an entity in Europe to be able to access that. And so this is the model that is there today. So banks are very used to that model. Now you're talking about a completely decentralized. Now, the problem with the centralized model is that it is very limited in the membership. That is, only certain members have access to that club. And if you need access to that club, you need to go through a member. And so the number of people, give you an example, the number of people who need access to a venue such as CLS for FX settlements is 30,000. The number of people who actually have access is 78. So each time, these the 30,000 people who need access to this have to go through one level or two levels in order to get to that level. So each time there's a hop in money, and then eventually it gets and settles, and then those hops have to be, you go and then you come back. Each time there's a hop, there's a cost, there's risk, and there's significant delays in that. That is what we are trying to disrupt. That is not easy. It's a mind shift that you have to do. And so we had to cross that thing that this was possible. And when Jerome talks about there's a lot of legal regulatory things that you have to look at. There's the operational resilience of the technology. Can the technology do what it's supposed to do? And if it does it, is it operationally resilient to have 99.999% uptime and all of that stuff? Cybersecurity. This is real, right? This is the piece that, it's a lot of work that has to go into this. And so, we had to take a lot of precaution to make sure that when we build something, it'll actually stand up and it'll be operationally resilient. It will have cybersecurity to the level that is true, and you have to be able to stand behind that.
Sorry to interrupt, but this is exactly the problem that kills so many fintechs at early stages, right?
That's
and
exactly right.
So you were ahead of the game on this to make sure that you knew what, where and how.
Yeah, it's not just that. We think about how do we prevent cyber attacks? That's everybody has to do that. But not just that, you have to think about what happens when you get attacked and when you're down. So it is not just the technology, the operational resilience behind the technology, the people that can stand behind that to provide 24/7 support. That is the piece that we are now, we've thought about it for the last 3 years. We have been actively working on it, and we've put people behind that and money behind that. So it's not just a technology. We have to think about it from a legal, regulatory standpoint and operational resilience. That's been the challenge, and it's been an interesting journey.
And some good lessons taken from it. And this, as you say, that this is a business that's based off a real market need and a real market problem, which is what I'm always there. Jerome, I'm really interested from you to, from having been the sort of poacher turned gamekeeper, so to speak, in this scenario. This is there's a lot of challenges, major challenges for large institutions facing the FX and post trade today. Talk to us about some of those areas and how Baton are helping to combat it.
So, Toby, that's a really interesting question. I think that, in the forefront of any market participant's focus today is really, settlement exposure. And I would, argue that is at the core of what Baton is trying to solve for. Settlement exposure today takes a couple of shapes. If you're a member of those happy 78 who can settle on a riskless basis via CLS, then your risk exposure, in theory, is non-existent because you're settling in central bank money, but your funds are tied up for a 24-hour period while that riskless settlement is achieved. If you're outside of that 78 and part of the 30,000, then you're looking at a much different sort of profile. And that is essentially, you're posting your money on one leg of the trade and then hopefully receiving the money that corresponds to the other leg of the trade at some point, over the next, 24, 48, or, even and longer. So there is definite sort of, naked exposure there that, does require a certain amount of capitalization. And there are a fair amount of, rules around that. What we are doing and what we've achieved, as you saw between HSBC and Wells Fargo last month, we are able to essentially settle on a riskless basis in commercial bank money in a 3-minute time frame. We did the first trade in the second week of December. That was covered very broadly by the press, and since then these two counterparties are live. This is not a prototype. This is not a proof of concept. This is a production. This is production environment. So these two counterparties are actively settling their trades on a riskless basis without pre-funding every day. I guess the second important point there is that this is available to those 30,000 other market participants who are not eligible or able to become members of the only existing riskless settlement venue in the world today. And that has very, very significant implications for the future of post-trade in the FX space. If you can imagine from a risk manager's perspective, being able to essentially marshal workflows on demand between itself and their various counterparties in whatever currency pairs they choose to settle, whether they are so-called eligible currencies that can settle risklessly today, or ineligible currencies which do not qualify for riskless settlement on CLS, Baton can handle everything. So that opens up a whole new world. Baton also allows these clients to essentially say, at a certain level of exposure on either a net or a gross basis, I choose to settle. We can trigger that settlement workflow. If there are timings during the day that correspond to certain liquidity events within a given counterparty, Baton also can add time thresholds to act as triggers as well. So there is this idea of empowerment or choice being given back to market participants that up until mid-December just simply did not exist. And we do think that this is a major turning point in terms of the evolution of post-trade for FX settlements. So we're quite excited about that. Beyond that very simple, I should say, in air quotes, simple concept of settlement exposure, there are also, as I'm sure you can imagine, or you've been sort of connecting the dots yourself, very significant impacts to funding and liquidity. Because if you are able, obviously, to manage on a dynamic basis your settlement workflows, on demand, then you're no longer required to post massive amounts of funding over 24-hour cycles in order to achieve, the same riskless outcome. That also, clearly, has a very significant impact in terms of how firms will be able to manage their liquidity. Because, through the Baton platform, clearly, we can correspond, we can establish workflow timings and thresholds to correspond with, significant liquidity triggers during the course of the day for the various counterparties involved in those workflows themselves. So, Toby, I think that we are definitely entering into some very exciting new territory, and 2022 is clearly going to be the year where we push the boat out of the harbor in a very meaningful way.
It's so exciting, isn't it? And it's not often you can generally say something's game changing and truly disruptive. And I think that there's always been a massive excitement coming out of Baton. It's been a company that's had great press, as I said before. But December felt like an announcement that really shook the industry a little bit. Yep. I know that you were quoted and interviewed a lot about it. There was a lot of noise that came out about this particular process. Tell me your thought on it. How exciting is it, and what's it really mean?
What's exciting about this is we are opening up a new paradigm. The problems in payments is real. It's expensive, and it is not accessible for most people. When you think about the focus of the BIS and international settlements, it is about bringing down the cost of payments and increasing the speed of payments, whether it be for retail payments of people sending overseas remittances, small dollar values overseas remittances. It's expensive, and there is no easy access for that, and that has created market infrastructure such as money transmitters, which is expensive for people. Now, when you really dig under the covers and look at the problem, it is not that simple. It is because these smaller banks that are there that need access to this are cut out of the system. We talked about the 78 members, but the number of people who need access to this is 30,000. If you really go even further down, it is hundreds of thousands of banks, small institutions that need access. The rural banks that need access to these kind of systems. They may be doing about a few hundred transactions a day, but still they are cut out of the system. And so what is exciting about the Baton journey is that we are democratizing access to this, not down to the individual level, but at least to the financial institutions that have direct relationship with these individuals. And that is the thing. So I almost think of it like how Visa and MasterCard and Discover Card, they democratize this access to accepting payments for the small retailer. That was about 30, 40 years ago. Mm. We look at that same thing as market infrastructure, game changing in market infrastructure, democratizing access to everybody. And so that is a big, bold vision. It is a hard one to accomplish, but that is the journey that we are on. And what we have proven at this point in time is it is possible. First, you have to prove that it is possible, and it is something that you can do on a daily basis, and it's reliable, and it has got the operational resilience. That is what we have proven. There are a few more parts that we have to do before we can completely open this up for full access for people to sign on. But that's certainly the journey that we're on, and that's what's exciting at this point in time for us.
And it's using exciting technology as well. There's been a big buzz throughout 2021 about distributed ledger technology. You chose to sort of bring that into this. Tell us about the why. Why did you go down that route?
Yeah, so I want to, it's easy to talk about the technology, but I want to bring this back to first principles and talk you through that. Think about how an FX is traded. You're a bank, I'm a bank. We've done a trade at some point in time. Our middle office is interacting with your middle office. Then eventually our treasurers are interacting with your treasurers, and the money is being exchanged. When you think about it from first principles, there's a workflow in my bank and there's a workflow in your bank. and people in my bank are talking to your bank. So it's actually a distributed workflow. So, even if you solve it in one bank, even if the best of banks solves it in one bank, you are not solving the other side of the problem. So this is the way the distributed ledger technology actually shines. It is not in the digitization of assets, it's actually the distributed workflow that is there. So when Jerome talked about the workflow, we enabled the distributed workflow using distributed ledger technologies. So I want to be very careful and bring the distinction between blockchain versus distributed ledger technology. Sometimes they're confused as being the same. So it is, we think that they're different. They're distinct enough. There are some similarities, but they're distinct enough. What we have is a distributed ledger technologies. We have brought in some of the constructs of the blockchain, but the most important thing is that we are running a distributed workflow with a shared views of the same data. So both of them are seeing the same data, but it's a distributed workflow that's executing in two different institutions. And as they're going through that workflow, there is complete visibility. You've removed that opacity, and you're actually bringing efficiencies across multiple organizations. And eventually, when you settle those assets, you're doing this just in time. So you're almost bringing just in time for the purpose of funding. And that is a big one. The fact that you've reduced opacity reduces risk. You've increased the speeds of this, and you're settling money, you're exchanging money just in time. And that brings huge efficiencies to the markets. And we bring in the same efficiencies of the blockchain, such as immutability or tamper resistance, the notarization of transactions. So you have a proof for that everybody, and non-repeatable proof that this transaction has happened. So that is what we did. And we did this with very well-proven technologies. And this is where our backgrounds in, my background, as well as my CTO, Mohammed Abidi, we've done this for many, many years. So this was something that we knew going in that this was the right choice, and it's proving that it was the right thing.
Fantastic. And look, it's interesting you mentioned that sort of distinction between distributed ledger technology and blockchain, and I think sometimes that sort of confusions can hold the whole movement back a little bit. In both aspects, on both sides of the coin, there remains a little bit of confusion and resistance to it, particularly in the banking sector. We know how long it took cloud to be fully adopted in banking, and I think there's probably that similar sort of thing there. Jerome, tell me a little bit about how, if there's been resistance from the banks with regards to this, and what your thoughts are around that as well.
I wouldn't say that there's resistance. I was just thinking about this as Arjun was speaking, because today, I mean, it's pretty typical Baton day. I started off with a discussion with potential clients in China. Spoke with a couple of clients, a couple of client meetings with European clients this afternoon. The same concerns are expressed virtually wherever you go. The same amount of interest is expressed wherever you go. I think, coming back to what we were discussing earlier, it is the so-called novelty of the distributed ledger, which is where, if anything, we, I wouldn't say get pushback, but where, we go into sort of the very deep dive in terms of the minutiae of the technology and most certainly the security around that technology. So I would think that, that is, where, we, have to, really sort of roll up our sleeves and do some of the heavy lifting. That being said, though, Toby, I think that the banks, by and large, realize that they do need to forge a new path forward, and that I guess the existing rails just are not going to carry markets where they need to go. And I also think, and I think this is a very important point, that what we're doing at Baton is very extensible to what most certainly will be development in central bank digital currencies, perhaps stable coins as well. But we need to create the rails for, to create the capacity to essentially settle those assets. And you need to start somewhere. And if you can't do it for fiat currency, then believe me, you're not going to be able to do it for anything else that comes down the path, which is more technologically sophisticated, whether it's a smart coin, whether it's a stable coin, whether it's a CBDC. So I think that this architecture that, this brilliant team that we have at Baton is creating, for, our clients is a first step in a very, forward-looking journey in terms of how we actually think, this overall sort of, the money environment will evolve. money is changing, and we're creating that environment to accommodate that. And banks are very, very open to that discussion. And interestingly, I think there are a number of people talking about this today in terms of perhaps being able to talk about network connectivity, or a new approach to settle in central bank money, or a way to create netting sets. At Baton, we're looking very holistically at this entire challenge, from trade capture through netting in real time, through settlement in very compact time frames, with non-repudiation thanks to the distributed ledger notarization of the trades, as Arjun was saying, full transparency, amongst the counterparties to these trades. And this, I think, is going to be the hallmark of how trades settle in the future. Starting with FX, that's our starting point. But I think that this is something that you're going to see, extend into securities, derivatives, and other asset classes as we evolve, and as what we are doing today becomes accepted as more mainstream for the banks that we're dealing with today.
Without question, I think there's massive advantages as well for people to be the early adopters in this, isn't there? And that represents a really exciting journey for you. Jerome, I think you mentioned at the start about the how exciting 2022 looks. I'm going to come to to finish off this with both of you giving your sort of crystal balls and excite us about what's coming up in 2022 for Baton. Arjun, I'll ask you first.
Look, what is exciting about 2022 for the markets? I'll take it in two chunks. I mean, what we think markets are going to change, and how Baton is going to do. Look, I think you're going to see more clarity on regulations around stable coins and digital assets in 2022. That is something that is finally that the spotlight is on that, and you will see more clarity on that. That is good, and eventually, banks have realized that they cannot sit tight on this one. Status quo is no longer an option, because there are new challengers who will come in and disrupt that market. And if you don't adapt, you're gonna be left behind, significantly behind on this one. So that is a good thing that has happened, and that's a catalyst for this. The second thing that I think from a market perspective is finally the regulators have realized that faster settlements and safe settlements is a requirement. This ball started rolling about 2 years ago, and now we are starting to see when Jerome talked about, both of us are on the working committee of BIS and on CPMI on riskless settlements. And imagine a small company like Baton, being actively involved in making these on laying the roads for riskless settlements at a global level. And so I think that is another thing that is there. So finally, banks have come to the realization that status quo is no longer an option. And this is where Baton fits in. So now I'll come to where we see this one. What we have proven, the announcement that came out last month was really an industry-defining moment for us. We have demonstrated that now you can democratize access to this and do safe settlements of currencies. We are starting with fiat currencies. You're able to do safe settlements of fiat currencies between counterparties on demand. And that is going to be a breakthrough for us. So we think that we see our business growing, somewhere between 150 to 250%. Again, we cracked only the largest banks. Now we think that we're going to solve the next set of problems. So we will continue to grow, and this brings new sets of challenges. I mean, while that's exciting, there's a lot of challenges, operational challenges, hiring, retaining in this environment of COVID doesn't seem to be going away anytime soon. So
quickly
managing that is going to be our set of challenges. I mean, that's why we have great leaders that we are hiring who have done this in the scale up part of our journey. And so that is what I see the crystal ball at this point in time. A lot of work for us, but a lot of excitement as well.
It's the sort of work you want to be doing, isn't it?
And like Jerome, yes.
Jerome, what would you add to it?
I would just echo what Arjun said, particularly around CBDC. I think this is going to become one of the major themes of 2022. And again, just coming back to what I was saying earlier, I think that it's very interesting to me how markets grab onto new things. They tend to grab on things in the pre-trade or in the trade space. I mean, we've seen billions and billions and billions of dollars invested in electronic trading platforms and, the ability to trade algorithmically, and we've moved from micros to millis to nanos in terms of, the time it takes to actually execute a trade. Whereas, by and large, the post-trade state has been, I would say pretty much neglected. As CBDC, which I think is being discussed, more as call it in the trade space. I think we're one of the few that are already thinking about, how to adapt to, the post-trade structure that would be required, when CBDC does become, much more a part of our everyday lives. And it's happening. We see China, with the ECNY, project, which they want to have ready for the Winter Olympics. Mexico, I think, just announced, or I saw news today, that they have committed to launching a CBDC by 2024. That we'll see what happens there. Our own advisor, Christian Carlo, is head of the Digital Dollar Project, in Washington, D.C. And this is going to get a lot of traction. Regulators are very focused on this. And I think that's going to, direct a lot of attention to what we're doing here at Baton. Relative to Baton, I think, 2022 is the year where we create what we can call nodal density, meaning essentially, just, bringing on more and more participants to the network to, avail themselves of the ability to settle on a riskless basis, across, the Baton digital ledger, distributed ledger. And so that's something that, we're ultra focused on right now. As, again, Arjun said, it was a watershed moment for us in December, and we're looking now to capitalize on that and increase that nodal density, if you will, as we work through 2022. But lots of exciting things happening. I mean, you couldn't imagine a team that's more fired up to, if you'll pardon the expression, kick some ass in 2022.
I'm all over that. I love the sound of it, and it's just brilliant to hear. There's going to be people here who are as excited as you are about it, from who are watching this and want to find out more. What's the best way for them to do that? Who should be talking to you? Who are you going to be helping, and what's the best way to get in touch with you guys?
Well, I think clearly we've got a killer website, batonsystems.com. And we can be contacted through there. We're all on LinkedIn as well, so we're contactable through any one of social media outlets that you can imagine. I think we're all very well connected in that way. Arjun and I tend to make the rounds when we can to various industry events, and we get out that way as well.
It's good to see them coming back, isn't it?
Oh God, yeah. It's yeah. I mean, I have nothing against working from home over my screen, but there's nothing like sitting across the table, and having a conversation in
Definitely.
3D. Yeah,
definitely. Well, long way to continue, gentlemen. It's been an absolute pleasure. I'm so excited to see this. If it was exciting talking to you 2 years ago, nearly 2 years ago. Imagine what it's like now. It's just been a phenomenal thing to see. We're all still here. Phenomenal thing to see the growth, and just to hear that sort of scale of growth happening again and again, year on year, is just something I hope you guys are, and I know you guys are tremendously proud of. So brilliant to see it. Thank you so much for sharing the wisdom and telling the story today. I'm sure it's been so valuable to everyone and inspiring to people who are watching it back at home. So really appreciate you coming on, and great to speak to you both. Thanks so much for that.
Thank you, Toby.
Absolute pleasure. And thank you all for watching. We will see you soon on another episode of Fintech Focus TV. Thanks a lot.